Hey everyone, Joe Lentini here. The One Big Beautiful Bill, OBBB, has significant changes to how gambling winnings and losses are taxed. These changes could have far-reaching effects on both casual and professional gamblers. Currently, gamblers can deduct 100% of their losses from their winnings for tax purposes, provided their losses do not exceed their winnings. The new bill, however, introduces a permanent amendment starting in 2026. Under this amendment, gamblers will only be allowed to deduct up to 90% of their losses against their winnings. This means that even if someone breaks even over the course of a year, they would still owe taxes on 10% of their winnings. The tax implications of the bill. The proposed amendment could lead to scenarios where gamblers face tax liabilities that match or even exceed their net income from gambling activities. This presents a new challenge, especially those who rely on gambling for a steady income. All gambling winnings are treated as taxable income in the U.S. This includes cash prizes and the fair market value of non-cash prizes like vehicles or trips. As such, all winnings must be reported as other income on your federal tax return. For significant winnings, the payer is required to withhold a portion for federal taxes. If your winnings exceed $5,000, 24% is typically withheld, ensuring some of your tax liability is covered up front. Deducting gambling losses. Under the old regulations, gambling losses can be deducted, but only if you itemize your deductions on your tax return. The stipulation is that these deductions cannot exceed the amount of income you declare from gambling. The new bill changes this calculation, limiting the deductible portion to 90%. Given these changes, maintaining detailed records of all gambling activities becomes even more critical. This includes receipts, tickets, and any statements that can substantiate your claims for deductions. Impact on professional gamblers. Professional gamblers who report their income on Schedule C as self-employed individuals face additional challenges. The proposed deduction limit would also apply to non-loss expenses, such as subscriptions to data services necessary for their business, which are currently taxed differently. State and local tax considerations. It's important to remember that state and local taxes also apply to gambling winnings, but some states are tax-free when it comes to jackpots. Some states may impose tax at the time of the payout, and if you win money in a state different from your residence, you might owe taxes in both states. However, tax credits are typically available to avoid double taxation. As always, we're here to help you navigate these new rules and make the most of your tax situation. If you have questions or want to discuss your personal circumstances, please contact our office. We're committed to helping you thrive under the new tax law. If you'd like to schedule a tax planning phone appointment to discuss the impact on you and your family, our special summer rate of $75 for a 30-minute consultation, which is 50% off our regular rate if scheduled between now and September 15th. Then the rate through October increases to $125 for a 30-minute consultation, and finally the full-time rate of $150 will kick in after October. We're here to help you and would love to discuss how we can help you make the most of these new tax laws.